We're having a good morning. Well, to discuss a whole host of stocks, well, we're joined by Mr. Deven Choksey of KRChoksey. Hi, Deven. Good morning. Well, let's talk about some of those stocks that will be in focus because that windfall tax is gradually getting pulled back, particularly on diesel as well as on ATF. How do you approach these stocks, namely Oil India, ONGC, and Reliance Industries?
Well, Nigel, good morning. Well, with the correction in the crude oil prices, and I think the price is staying at a lower level, the amount of money I think which would otherwise be collected by way of windfall tax, I think is probably now going. So this is a non-tax, I think, as far as the companies are concerned. So from that perspective, I think the superlative profit and the superlative tax both have gone, as I see it. Going forward, I believe that I think if the crude oil prices stays in the stability region of around $80 to $90 per barrel, then possibly I think most of these companies would have relatively better times going forward. As of now, as it stands, I think probably in the refining segment, the cracks are on a positive side. And that is where probably I think this quarter should result into relatively better performance for most of the companies, including the lands industries.
Deven, hi. Good morning. You know, the IT services sector sold off big time, Deven, yesterday. Once again, I mean, it had a bit of a reprieve in the earlier part of the week, but it all went away. And today, we, I think, get the Accenture numbers, which we will talk more about a little later. And that perhaps is a cue. What's your sense, IT services from here? Will it continue to get whipsawed one way or the other, maybe small bounces, but bigger drops?
So good morning, Prashant. As I understand, I think the market action yesterday in some of the large cap counters, including in IT, I think have been the outcome of some of the global portfolios shading their weight into from the portfolios in India exposure. In my viewpoint, I think nothing but the technical correction which is happening. Some of the larger companies where I think they are shading their weights, I think it includes IT company, includes Reliance, includes some of the banking counters as well, where I think a part of profit booking position or some amount of weight reduction has happened from their portfolio. I don't see anything fundamentally wrong with many of the IT companies. On the contrary, I see a good reason for some of the large cap IT companies to bounce back at some point of time. In the corrective downside, I think we are likely to see the buying taking place into this counter, including companies like Wipro, which has announced, I think, a deal yesterday. I think they are the ones I think who are basically showing some large contracts. I think getting signed up for multiple years, giving them a visibility of 5 to 7 years on each contract of a larger size. So from that point of view, I think that the IT companies deserves to be there in the portfolio. Any corrective fall or downside due to any technical nature in the market, I think would be a welcome opportunity for long-term investments as far as I think the quality names are concerned.
Okay, so IT names are looking attractive to you right now. Deven, what about GMM Pfaudler? The big news today is Pfaudler Inc., which is a promoter of GMM Pfaudler, is looking to sell close to 30% stake in a block deal today at a price of 1,700 rupees per share, which will give the promoter close to 2,300 crore rupees. This is big, right? A promoter selling close to about 30% stake. Your thoughts on what it means for shareholders?
So, Rima, I haven't examined this particular transaction so far, so would refrain from putting any comments, maybe at some other point of time.
Okay. What about Reliance Industries? They've done that launch, the independence launch, the FMCG staples kind of business. Well, right now, analysts are saying that, it may not have an impact on the other listed entities, but we know Reliance Industries tends to be fairly disruptive in whichever segments they enter in. How would you read this development and the impact on other listed players? Would you tread with caution?
Well, I think one important point, I think, which you are basically observing here, Reliance has created on-ground presence of their stores. And now they have got the tie-up with Kirana stores. So obviously, I think they have created the market outlets, I think, for themselves to begin with. Now creating a brand and putting into the shelf, I think is basically the sensible thing to do. Because with your own brand, you are commanding better margins compared to, I think, the brands that you are selling from other FMCG players, and including among the other food companies. So from a perspective of, I think, getting relatively better margin, and that too, I think, having your own outlets to sell, this is a win-win combination as far as I think companies like Reliance in the retail segment goes. So in my viewpoint, I think it should be seen as a winning strategy. You may call it a disruptive strategy. I would call it as a, I think, well-planned and thought-out strategy. Wherein on one side you create, I think, the outlets, and on the other side you are basically promoting your own products on your own brands, which is what I think the company has been doing. I don't know immediately whether one can say that it will have impact on other FMCG companies, but I would think that I think the move remains distinctly positive for Reliance Retail per se, as far as I think their business is concerned.
All right, Deven, just request you to hold on. We're just going to be going and having a chat with the management. We're going to come back to you. Healthcare Global, that's the stock in focus. Well,